SpaceX is widely expected to hit the stock market on June 12th. With a potential valuation of around $1.75 trillion, most people are just watching the IPO, but the smart money is looking at the companies linked to it. Today, I'm showing you 5 stocks tied to SpaceX success. We'll cover the suppliers, the growth plays, and one hidden ghost asset on the big tech company's balance sheet that most Wall Street analysts are ignoring. At number 1, we have Carpenter Technology. It goes by the ticker CRS. It's the Raptor Materials moat. Carpenter is a vital partner to the aerospace industry. They supply high-purity, vacuum-melted metals and specialized powders needed for extreme environments, like the SpaceX Raptor engine. Their strength comes from metallurgical lock-in. In aerospace, switching the new metal supplier for a high-stress engine part is a massive, costly recertification headache. Because Carpenter masters the proprietary melting process that meets SpaceX extreme demands, they have become a primary, hard-to-replace supplier for programs like Raptor. Their integration of high-performance powder for 3D printing further cements their position as a key supplier for advanced rocket production. At number 2, we have Howmet Aerospace. It goes by the ticker HWM. Howmet provides the essential structural components that hold launch vehicles together. They manufacture high-precision fasteners and large structural joints that allow rockets like Falcon and Starship to survive the intense pressure, vibration, and thermal loads of launch and landing. Their moat is built on capacity-driven dependency. Producing the critical joints and fasteners that must survive peak aerodynamic pressure and extreme launch load requires specialized capital incentive facilities that are difficult and slow to scale. Because these components are indispensable for rockets' structural stability, Howmet is not just a vendor. They function as an extension to the production floor. Any meaningful disruption in Howmet's output directly constrains how fast SpaceX and other launch providers can assemble and launch rockets, giving Howmet significant leverage in aerospace supply chain. At number 3, we have Rogers Corporation. Goes by the ticker ROG. It's the bandwidth gatekeeper. Rogers make the specialized high-frequency material used inside Starlink satellite antennas and ground stations. These materials are engineered to keep signals clear and stable even in harsh conditions of space, including extreme temperatures and vacuum. Rogers' moat is defined by signal reliability. In satellite communications, the effective speed and capacity of the network are limited by how well the hardware can guide high-frequency signals. Rogers' proprietary materials deliver exceptionally high performance in extreme heat and vacuum conditions. Because these materials form the underlying physical layer of the RF path, Rogers act as an operational choke point. Their decades of aerospace and high-frequency materials experience makes them very difficult to displace without risking the network's performance and reliability. At number 4, we have EchoStar, goes by the ticker SATS. It's the satellite and 5G infrastructure proxy. EchoStar is a major player in satellite broadband and spectrum assets, positioning it as a key infrastructure provider for next-generation connectivity. Its portfolio includes valuable low Earth orbit, also known as LEO partnership, and extensive spectrum holdings that underpin satellite and 5G networks. EchoStar's moat is built on spectrum and infrastructure scarcity. High-quality spectrum licenses and satellite network assets are finite, capital-intensive, and difficult to replicate. As demand for satellite broadband and hybrid 5G satellite services grow, EchoStar legacy satellite business and spectrum portfolio become increasingly strategic. Investors can use EchoStar as a public traded proxy for the broader satellite connectivity and space infrastructure boom, including competition and complementary with systems like Starlink. And I'd like to add a bonus stock over here. That's the Alphabet. Goes by the ticker GOOGL. Alphabet owns a significant stake in SpaceX, approximately 6 to 7.5% from a 2015 investment of about $1 billion alongside Fidelity. This investment has largely been tucked away on Alphabet's books at historical cost, with only occasional unrealized gains recognized in earnings. Their moat here is the valuation upside. As SpaceX moves towards a public debut, that stake could crystallize into an asset worth $100 to $120+ billion. Depending on the IPO valuation, when SpaceX goes public, Alphabet could realize a massive one-time boost in its book valuation and earnings. Most analysts focus on search ads and AI, but they are largely missing this huge SpaceX optionality sitting on Alphabet's balance sheet, an anti-fragile upside that exists independently of Alphabet's core business performance. That brings us to stock number 6. That's Rocket Lab, RKLB. It's the sympathy leader. Rocket Lab is the premier public alternative to SpaceX, acting as one of the few pure-play public traded companies with proven flight-certified launch vehicles. It serves as a primary release valve for investors who want exposure to their space sector but can't access the SpaceX IPO. Rocket Lab's moat is built on execution credibility. In an industry full of delays and failures, they have had a reliable track record of successfully delivering payloads to orbit. Their strategy of building their own satellites, components, and launch systems, that is a leaner version of SpaceX vertical integration, makes them more agile, accessible alternative to that model. As the space sector grows, Rocket Lab is leading destination for investors seeking a pure-play launch operator with proven capabilities and strong government trust to sustain long-term growth. So, how do you play this? We would like to break it down in 3 different buckets. The first one is structural research. Those are the picks and shovels. For the hardware builders, look at Carpenter or Howmet. They are the key suppliers of alloys, powders, fasteners, and structural parts. The second bucket is growth analysis, pure play launch. For a flight-proven public rocket company, monitor Rocket Lab. And the third one is valuation and holdco research, which gives you indirect SpaceX exposure and space economy valuation dynamics. Research Alphabet, which holds a significant SpaceX stake, and EchoStar, a satellite spectrum infrastructure player. Remember, this is for educational purposes only. These are simply the companies I'm watching closely as the SpaceX IPO unfolds. Do your own deep dive research before deciding what deserves a spot on your personal watch list. If you want the full context of how SpaceX merger with xAI is driving this $1 trillion valuation, watch my deep dive analysis right here. Subscribe to GeoVantage Markets for the latest on the IPO fallout. See you on the inside.